One of the most important price action concepts to understand are order blocks. Now, what is an order block exactly? An order block is an area on a price chart where you can clearly see a large order or series of orders being placed in the market at a particular price. You'll see an order being placed and a large rapid move away from that area, which we will be denoting as our order block. Order blocks come in two different types, a bearish order block and a bullish order block. If we're looking at a bearish order block, what we will see is a move up, which then follows a large impulsive move to the downside or series of moves to the downside that breaks structure. A bullish order block is the flip. You'll see a down move and then a large impulsive move or series of moves that break structure. These order blocks are essentially areas of supply and demand in the markets, and essentially institutions have placed large orders at these areas, and the logic behind it is that price is gravitating back towards these zones for more orders to be placed, as well to rebalance price and fill any additional liquidity that just was not filled when price rapidly moved away from the order block. When we're looking at an order block, we can clearly gain an entry and a stop loss based on the principle of price coming back to these blocks. So if we're looking at a bearish order block, for example, if we were looking to enter, we would look to enter on the bottom portion of the order block with a stop loss just above the top of the block itself. Basically looking to get triggered in once price taps into the block and then looking for a continuation to the downside. On a bullish order block, we would set our entry just at the top of the order block with our stop loss just below the order block, with the same rationale that price will then trickle back down into the order block. Once tapping into the order block, will continue to the upside. Now let's run through some examples of order blocks based on what we've learned. So if I look at price here, we're on Euro US dollar on the 1 hour chart. What I can see is we have a structural high here, and we have a break and a printing of a higher high in this case. Now what we can see if we look, we have a down move candle that originated the move. We get the break of structure, and then we can see as price then begins to come back down and tap into the block and then explodes away to the upside. So if we look at this, if I just take this back for a minute and we just look at this in its pure state, what we can see is price broke structure here, creating a higher high, a higher low, and is now making a higher high. If we look at structure all in itself, we can see that we break this high and we break this previous high, which is actually the 4 hour higher high of this structure. So we can see we've broken a fair amount of structure to the upside. We've done it quite impulsively. We've created an imbalance right here and here. We'll go into imbalances a little bit later on, but just something to highlight here. And basically what we'd be doing if we were looking to enter this trade solely on the hourly, we could put a buy limit order at the base of the order block with our stop loss just below the order block itself. We could even factor in this wick just like that. And what we can see is we have our trade set up just like that. And what we can do is if we just keep playing price forward, see price is now starting to trend to the downside. We tap into the block, tap into it once more again, and then we get a bullish engulfing candle. And there we go. We start to see momentum kick actually into the market, and then we can see that price then explodes to the upside. And one thing to note about order blocks, and a refinement that I've come to in my experience with them, is one concept of price action that needs to be taken into consideration is price doesn't know time and time doesn't know price. And what do I mean by that? When you're looking at charting packages, we have various time frames, 1 hour, 2 hour, 4 hour, daily. We can also use custom time frames, 3 hours, 8 hours, etc. But with that said, institutions don't necessarily trade looking at a chart or understanding, or waiting for an hourly close candle to form before they create their order block that then creates price to go. So what we can see here in this case is we've created this order block. We have this down move candle. And if we look at the high of the candle and the low, we can see that the next candle, this bullish candle right here, doesn't engulf the order block itself. But what we can see if we look at the next candle, that's where we get our true momentum to the upside. That's when we break the structure, we create that imbalance like I had mentioned. So what we can do with that information is we can actually refine our order block to this bullish candle here. It's a small refinement that ultimately is not going to make or break your trade. You can see what this ends up doing is we take our stop loss from effectively 29.5 pips down to as low as 27.5, or if we just give it a little bit more room, 28. So marginally increased risk to reward, but the concepts remain the same. Now with that said, let's jump into a bunch of examples and really dig into everything. So I'll put some order blocks on the chart now, and what we can see if we start with this far one to the left, we can see, if I just zoom out, see Euro US dollar's been on quite the large uptrend. We're creating higher highs and higher lows and continuously pushing to the upside. If we look here, we can see that we have created a high, and we've now broken the high. We've broken it impulsively with clear momentum. What we can see is we would have our order block here as the bearish candle before the impulsive move that breaks structure, the structural high here. And again, like I just mentioned with this example, we can refine this order block a little bit further and understand that if we just move this out of the way, the high of this candle and the low, we can see that this candle didn't actually engulf this. The momentum didn't really actually set in until this candle here. So what we can actually do is we can draw our order block just like that. Again, it doesn't really change too much in the grand scheme of things, but it's a slight refinement on understanding the overall price action and the concept of price not knowing time and time not knowing price. So we just continue on. We can see in this case we are creating higher high, we have a higher low here, and we've now created a higher high. And if I just move to the right here, what we can see is we have this low here. We've broken this low and actually put in a lower low. And we can see the origin of that move is this bullish candle in this case, and price moved to the downside. Again, breaking structure, we had some substructure within it. And what we can see at the bottom of it, this would have been our previous lower high. We can see price breaks that high, moves quite impulsively. We can see that there's a little bit of imbalance along the way, and we can denote again our order block initially would be this bearish candle. We can see then the push to the upside. We've broken structure, but again, this bullish candle didn't engulf this candle. It didn't break the high convincingly, at all really. So what we can do is we can actually refine it to this bullish candle, and in this case what we can see is our entry becomes a lot more precise, but from a risk to reward perspective or stop loss size, 28 pips, and if we take the bearish candle here, it's about 28 pips. So it's effectively the same, just your order would have a lot less drawdown in this case. If we just keep moving on, we can see we break this high, we create an intermediary high. This would be better seen on the 15-minute chart or below, but we've broken this high. Again, we can see if I just zoom in this just a little bit more, we have a bearish candle before a move that breaks structure. And what we can see is, again, this candle really doesn't show too much. It's the next candle that shows the momentum. So what we can do is, again, we can refine it here, and again we can see that this taps into it and then explodes to the upside. And then we can see another essentially continuation style. We break another small intermediary high. In this case we can use the bearish candle because the next candle shows clear momentum, and we tap in. This would be a lot more useful on a lower time frame than it is on the hourly time frame. And again, following the same logic, we get substructure, break to the upside, we tap in. But one thing to note, we've had this order block in mind that once price gets there, there's a high probability that we'll see a sell-off. So we can see that price does respect the order block, continues to push, is trying to create a series of essentially higher highs and higher lows. In this case, it tries to do an attempt of a higher high. We do spike the high, and what we can see, if I just zoom out just a little bit and put a line right here, we can see that we have a clear equal highs in this case right here. So from a selling perspective, sellers' stop losses would be sitting just above this. Anyone that was looking for a breakout trade would be looking for something like that, or even people who are just setting buy stops to basically just trade breakouts would have their orders here. So basically there's a lot of liquidity sitting just above this high. So it's only natural that price would seek that liquidity and then push to the downside. And what we'll do is we'll dig into this on the 15 minutes charts to see how we could get involved in the sell that happens just over here to take that to the downside. But if we carry on, what we can see now is we're anticipating this larger sell. We can see a break of structure. We can see sentiment changing, and we can see, again, substructure here, breaks. We look at a candle here. In this case, we can look at it's just too large. We wouldn't actually take this into consideration, but it's definitely a point of interest that we can use on, say, the 15-minute or the 5-minute. And we can just carry on just a little bit more. We can see, again, we break structure to the downside with a very impulsive move to the downside. We then come back in, tap into the order block, and continue to push to the downside. Now, if we look back, what we can see here is this move broke structure. It moved away and created this order block here. And we can see how momentous this initial reaction was that created the high here. So we'd be keeping this in the back of our mind that this is still an order block. It's still valid. And again, looking at the higher time frame, i.e. the daily, we would see that we're still very much in an uptrend. So factoring that in, we could take a look at taking a potential entry here as well, and what we can see is price taps into the order block, basically gets to the very base or bottom portion of that block, but then continues to the upside. And what we'll be able to see on the 15-minute is an opportunity to get into this particular setup with a high risk to reward, targeting previous highs and essentially being able to set that up as a day trade. But you can see the logic playing out, and what you'll notice is price tends to prop up onto these zones, these order blocks, to continue on before different price action occurs. And again, if we just kind of carry on, we can see price creates a high. There's a high here, so we've now switched to creating higher highs and higher lows. We've created a higher low here. Once we've broken this high here, we've broken structure. We have a bearish candle before a move that breaks structure. We have some imbalance here as well, and here as well. All the criteria, so we can use this candle as an order block, and what we can see is price moves away from it, comes back, and then begins to explode to the upside. So now that we've mentioned all of that, let's just go down to the 15-minute and just see how we can integrate the 1-hour order blocks with 15-minute order blocks to be able to improve our risk to reward and to show how they work hand in hand, and just clearly to show how fractal the markets really are. Okay, so here we go. So if we look at the exact same example, I'll run 2 charts just to make things a little bit clearer in this case. So what we can see here is we have our 1-hour order block here, which broken structure right there, and we can see on the 15-minute we're creating a series of higher highs and higher lows. We can also see on here that once we've printed this high, looking at the substructure, you can see that we're starting to make lower lows, very small lower lows I should add, because we make a lower low here, then break the high. But what we can see is we've violated structure here and here. We can look at here as a potential for a very quick intraday position using an order block here. And again, if I just use the same logic of the refinement, we can see that this would have been our order block, but price pierces it and the next candle doesn't do anything. But what we can see is the candle after that actually creates the momentum that then creates structure breaks. So we can see that. But if you were to take a trade such as that, knowing that you're more counter trend because you're seeing the higher time frame clearly impulsing to the upside, you would want to be targeting your 1-hour point of interest to look for essentially buys. So what we can see when price actually does tap into this 1-hour order block, we can see that price taps into it and then it pulls away. it breaks structure on the 15-minute. It comes back down. What we can see here is a bearish candle before the up move that creates the break of structure. It taps into it and it continues on. So what we can see if we just compare the 1 hour entry to the 15-minute entry, if we were looking at purely from a 1 hour perspective, we would have our entry right there with our stop loss right about there. So about 26 pips. And even if we're targeting prior highs, we'll use that as our reference point. We can see that we have about 2.8% trade on the cards here. Now if I do the same thing, but I use the 15-minute order block, and one thing to note as well, when we have these type of wicks from an order block, it's best to place the stop loss under the wicks as opposed to at the block itself, or else you'll likely see some spiking just because there is liquidity sitting in that area. What we can see is we'll use a 12 pip stop loss, and again, same target. So we have 5.93% versus 2.8, so effectively almost 100% increase in the overall risk to reward that we can gain from that trade just from a small refinement here. But we can just see how fractal the market is. Once we've tapped into the 1 hour order block, we can see we've broken structure on the 15-minute, we've created an order block, we've retested that order block, and then continued to move to the upside. And what we can see, even though it doesn't break structure, we can see that we've created another order block. Price taps back into that, taps in one more time, and then continues. It just shows that the market is always constantly moving in a series of order blocks. It's just a matter of finding which ones make the most sense, that follow the rules of actually breaking structure. As we can see here, we did break structure, we did create an order block, we did tap into it and go. So multiple opportunities to be involved just looking at the basic structure that we are in a bullish trend, and we have this 1 hour order block. We can then refine it on the 15-minute and even lower. If I move on to example number 2, we can see again we had the break of structure here, which created our 1 hour order block. And what we can see on the 15-minute chart as well is we have that same break of structure, and we can actually denote that there's an order block that effectively shaves off half, a little bit over half of the size of the 1 hour order block. So what we can see is price then comes back down, just barely taps the 15-minute order block that sits right here, and then continues up. But if you wanted to wait for a little bit more confirmation, although this doesn't actually break structure, you can see that price does move away quite rapidly from that price point. Test it once, test it twice, and then explodes to the upside. One thing we'll cover a little bit later on is Wyckoff, but one thing that I will point out is what we can see from this market structure is actually an accumulation schematic, which we can actually look to take entries in this part of market structure, which would add confluence to taking that order block setup as well, knowing that we didn't actually break market structure. And then two other things just to make note of is, if I just move this order block out of the way for a second, you'll probably be wondering why I chose this candle versus this candle or versus this candle. And I'm going to sort that out right now. So initially, our order block would be just like that on the 15-minute, using the bearish candle before a move to the upside that breaks structure. But what we can see, the next candle didn't actually engulf price. It didn't actually get any sort of reaction, any sort of large momentous move. So what we can do is move to the next candle. And what we can see from that is, again, if we look at the next candle, it did not really break the high of the candle. It's still very indecisive, not really a whole lot of volume. So we can move that candle just one more time, and what we can see is we get a true engulfing candle with momentum, strong full-bodied candle, and then the next candle is high momentum, full body, and then that's when the move actually takes off. So we've been able to effectively reduce and refine that entry and order block, more specifically using that principle. So I just wanted to highlight that just so I don't create any confusion on that. And then we'll just move on, keep going through some more examples. So again, we can see that we have this 1 hour point of interest, which we would be able to see breaking structure down right here. That would be our 1 hour break of structure. So we can see that we have this bit of price action here. We can see that we've created a higher high on the 15-minute, then we've created a break of structure, we've pushed to the downside, we've broken structure yet again, broken structure yet again. So if we're wanting to trade counter trend, which can be dangerous and is only up to you to fully approach that if that's what you're willing to do, you can see we have this strong move to the downside that's broken the structure. And we have, again, we'll go with the bullish candle first and refine it. We have the up move candle before the down move that breaks structure impulsively. But again, we can see that the low of this candle, price didn't close or fill that. It was slightly indecisive. So what we can do is refine it to this bearish candle instead. And we can look at the move actually starts to be created right here. That's where the momentum comes in, that breaks the structure, and we can see price revisits that and then breaks to the downside. If you weren't convinced in that, you could probably move to the 5-minute chart and refine it just like that and continue the same process as well. But it just shows that, again, the markets move in a series of order blocks from block to block, whether with trend or counter trend, and you can use them to your advantage. So we'll move on to this next bit of price action, following the same rationale that we're starting to see a heavy downtrend of lower lows and lower highs on the 15-minute. And again, if I move back to the 1-hour chart just one last time, we can see that we're just about to break that structure, but we haven't quite broken it on the hourly chart. So again, we would be trading counter trend. We're becoming much more risky in our approach, but it just shows the concepts quite well, so I wanted to talk about it. So we can see in this case we have the low here. We've broken this low, we've created this wick here, but we've broken this low, broken structure again. We're basically putting a lower high, lower low, and then we form a lower low here. And what we can see is we have two order blocks in this case that we can take note of. We have this one right here, which we can see the clean push. This is the top of the range, but we also have this up move candle before a massive surge of liquidity into the market. We can see that this is truly when the momentum entered the market. We did have a strong push to the downside, but we can clearly see from price action these two candles are much bigger and stronger than here. So what we can see from a price action standpoint, that this is an order block and this is an order block. Now the best way to approach this, there's two different ways. One, you can put a 50% risk, or sorry, a 0.5% risk or half risk of whatever it is you're risking on this order block, and then the other half of your position on this order block, so that if price does tag you out, tags you out for 0.5% and then goes and tags into this one, and then you make up the loss here. Or what you can do is you can wait for it to tap in, and then if it does a secondary test, you can enter on that, or we can look at a potential lower time frame using the same context that we're using from the hourly to the 15-minute. We can use the 15-minute to the 5-minute just to refine and give you that extra confirmation for taking the trade. Again, we'll just keep moving on. We can see we have now broken structure again, and then we start to make a series of higher highs in the market here. From a continuation standpoint, again, counter trend, because now we would have been switching to creating a lower low on the 1-hour chart. But we can see we have this move, breaks structure, comes in, taps, and continues on. Similar to something like that, it just shows, once again, just want to highlight the power of order blocks and kind of how it ebbs and flows in the markets. But what I had mentioned on the hourly chart is once we broke this structure right here, we've broken the high, and we actually broke this high as well. We can see if we look on the hourly chart, we have an order block here. And what we can see, if I just draw it in real quick, we do also have a 15-minute order block within this order block. So there is the potential that price on the 15-minute could tap into that as well, similar to this example right here. But in this case, that didn't actually happen. But what did happen is on the hourly chart, we tapped into it and it took off. It didn't respect this or retest the 15-minute down here, or it didn't create a 15-minute order block to test. But what we can see if I just move price to the right, we can see we created an hour order block and a 15-minute order block that price did respect. But using that, we can see price moving to the upside. We create a break of structure right here. We can see a down move candle with a large up move candle. It creates a retest and continues. It's debatable if you would have been tagged into that or not, and also using structure. Looking at this, we broke structure technically here. There wasn't much structure, so much lower confirmation trade. You're really just basing it off of these two order blocks here. But what we can see is as price continues to move to the upside, we had our hourly order block. Again, I'll just open up the hourly chart. We can see that we've broken structure right here, and we can see, again, I had mentioned substructure and that it would be cleaner on the 15-minute, which it is. We can see we've broken that structure, and we have a 15-minute block as well as the hourly block. And in this example, we can see price moves away from it, comes back, taps the hourly block, but doesn't actually tap the 15-minute block. And then we can see that larger hourly block, which on the hourly doesn't actually look very clear. But if we use the same principles on the 15-minute, we can see that we've broken the highs here. So we've created this 15-minute order block, which then price moves away from it quite impulsively, taps back into it, and then takes off very impulsively. So if you miss this one, you're just using this as confirmation and then using the retest entry to get involved in the order block. And again, if you were using an entry, you would want to factor in this wick to the bottom here, just for liquidity purposes. But again, 9 pips, 6 pips. If you're feeling risky, we'll call it, you could use the 6 pips and consider this just a probability that it could or couldn't happen, and take that 3 pips as a risk to reward kind of increaser. But that's totally up to you in that case. But I do recommend keeping in mind those type of liquidity wicks. If we move to the next trade, you can see, again, I had mentioned that we were approaching a 1-hour order block, the larger one. What we can see is we break structure, create a 15-minute order block here. There's also one down here as well. And price comes up, it taps into the block, respects it, spikes the highs, and then taps into this block, and then starts to drop. And like I had said when I was talking about this particular example, if I just pop up to the hourly chart one more time, we can see that we have the equal highs. If I just put that ray line back on, we have the equal highs with sell stops buy stops and selling stop losses. Basically a lot of liquidity up here. We can see quite simply the sweep of liquidity. Again, we have an order block here, we've broken structure here, and then price taps in. Instantly would have gotten tagged out on that trade, but it's not a big deal, it's going to happen. And what we can see now, if we just look, we called out this order block down here because we have a break of structure, even though we know that the order block from here is likely to occur. We can see that price respects the block, comes back up, and we can just see that, if we did manage to stay in this trade, say you used a much higher stop loss, just as an example, this would be a great spot to either look to take profits, secure your stop loss, or just take partial profits, because price is likely to react to these key points in the markets, the order blocks. So just something to keep in mind. But we'll focus on this. We had that sweep of the highs, which would have stopped us out on this order block. But what we can see is price then swept the high here, pushed to the downside, it broke structure, it even broke some more structure down here. So we can see price is very strongly bearish at this point, breaking structure, creating lower lows and lower highs. So we can see that if we were to just move this out of the way so we can get this in clearly, if we look at this candle as our order block, we can see just from a logical standpoint that this doesn't really make sense. You know, if we were to put an entry on here, we would need about a 35 pip stop, you know, even just to that order block. It's a 2-to-1, not the greatest looking trade, which is why the refinement really came into play. We can see the next candle is just, it didn't actually create any momentum, so we can move our order block to this candle. And what we can see is then a breakdown, high momentum, breaking structure, breaking more structure. And what we can see is price just taps into it and then continues to fall. Now, of course, I had mentioned earlier that you should factor your stop loss in with the wick. In this case, because it's such a large wick, you can trail it down a little bit or factor it in, but either way, you still have a much smaller stop loss than if you were just purely basing it on that larger candle. So at least the risk to reward has been increased, but again, because it's such a large wick in this case, you can likely get away with reducing the stop loss in that case. But what we can see is price taps the order block and then just continues to push to the downside. Again, we can see this order block, we've broken structure impulsively. Price reacts to it initially, respects it, taps into this order block here, which we can see we have some structure here. We've broken that structure, and then we factor in the fact that we are now starting to respect the higher time frame order block. We're starting to create lower lows and lower highs. We can see that these highs are getting lower, so a little bit of extra confirmation for this block here as well. And what we can see is price then breaks to the downside, breaking structure once again. And then we can see this funny order block that we had talked about earlier on the 1 hour, where it's just large and totally out of place. But what we can see is, if I just get rid of that, we can see it on the 15 minutes, where we have a break in structure, impulsive move to the downside. We do get a tap in from right there, but we tap in again. Now, if you had your stop loss placed, there's a chance you could have gotten tagged out. If you factor in that wick, you would have stayed in. But again, it's just part of the game, and you're just playing the confirmations in these trades. And what we can see is price just then heavily taps in. So you can see that this on a higher time frame is where institutions bought in. So we can see now, if we're looking, we've created a low here. We've finally broken this low. Initially not impulsive, but started to get some momentum back here, and then continued to the downside. What we can see again is we had our tight hourly block that we identified here. So we had the break of structure here and break of structure here, high momentum moves. So this is correlating time frames as well. And what we can see on the 15-minute as well, we have our order block right here. And in this case, what you can clearly see is the 1 hour is actually much tighter than the 15-minute. And that is bound to happen from time to time. So this is where really your preference comes in. You know that the trend is heavily bearish, so taking an entry is valid. We've broken structure, multiple points of structure. We've had large momentum entering to the market. We know that we're likely to test into this area, and it comes down to stop loss placements. If we look at the hourly, we can get as tight as about 4.5 pips. And if we go to the 15 minutes, we just get tagged in there, and we can get about 9 pips, so a 5 pip difference. But again, risk to reward is still very good there, so it's totally up to you in that case. But what we can see is, again, we are approaching a larger order block, so we would more than likely want to be either targeting this area or at least be willing to take partial profits or secure in stop losses once we start approaching that area, just to be certain that we've secured as much as we can on that particular trade. What we can see, we tap into the block, we get a little bit of respect of that block, going very deep. So the 1 hour entry would have been valid. You would have had a lot of pain, a lot of drawdown there, but it's not a big deal. But what we can see is price on the 15-minute, we break structure, we break structure once more after tapping into this 1 hour and 15-minute order block. So we can see that we've created a 15-minute order block right here. And again, if we use this bearish candle, we can see the next candle, large wick, doesn't really show much decision, but if we move it to the next candle, we can see that we start to get the actual momentum. That's where we actually created the break of structure. And if we look on the hourly time frame, you can see we broke this structure here as well. We do get a push into the market, so we can see it on the hourly, the strong impulsive nature of that candle as well, which is why we could denote it as a 1 hour as well. And again, as we can see, we tap into the zone and move to the upside. Targets would likely be prior highs initially, just because we were looking at lower lows and lower highs forming. So of course this in its own regard right now is counter trend when we're looking at the 1 hour and 4 hour trend. So something to be mindful of. You don't want to always be swinging for the fences on every trade. You want to be logical in your approach. So whether you target the previous highs, or again, like I said, you take partials, or you tighten up your management, totally up to you. You can see that we have a little bit of an order block that does get respected a little bit, so maybe you look to keep your stop loss under that point, maybe take some partial profits up here, stop loss below this order block, and what we can see is price then does roll back over and creates a lower low. Again, following the same logic, we can see we break structure, we're starting to make higher highs in price, and we can see from a continuation standpoint, we have this order block that we could have taken a more risky side of things, because if we look on the hourly chart, the structure that we would more or less be breaking would be right here. So this is kind of more intermediary. We do have this high that we did break, which is valid to suggest that this order block is with the trend. So just depends on that. On the 15-minute, it is incredibly clear structure. You can see we break the low, so then our high is here. We break this low, high, break this low, then we create a series of higher highs. So there's a lot of confluence to suggest that a buy on that particular order block right there would make sense. And then we'll just use this as a final example. We see we have structural point here and here as well, and here and here. So we've broken these highs quite impulsively. And we can see from a 15-minute time frame, let's go to the hourly just really quick. We can see a similar process where we've broken this high impulsively. We can use this bearish candle as our origin or order block. Then if we go to the 15 minutes, again, our order block would be this one here, and then we can just kind of move price because that candle didn't engulf. We look at this candle, does the next one engulf? Nope, still more indecision. Go here, we can go, okay, now we actually have some true momentum, but we do get a little bit of consolidation, just to point out, before we actually break to the upside, getting true momentum in the market. And what we can actually see too is if we just look at this one closely, we do have an order block here as well. This one may actually be cleaner looking because there is no liquidity tapping into it. But what we can see is now we're starting to get a little bit further away from the hourly and the original 15-minute point. And what we can see is we do tap into it. We create a wick into basically the initial order block on the 15-minute as well as the hour, and then we go. So there's a possibility if you took the top one, you would be stopped out. So it's just something to keep in mind, and just something I wanted to point out, as I know there would likely be a question as to why we didn't use this one in this case. And again, it just comes down to you run into the issue where you start looking at candles and you go, okay, it's not that one, it's not this one, it's not this one, it's not this one, okay, it's not this one. Now we get to this one, and you basically just started to move price, and we're correlating that with the hourly chart and the hourly momentum in this case. So that's why we would choose more this one, because it's in line with the hourly, whereas this one is above the hourly. And we know that we're likely going to tap into the hourly one, the hourly order block, and this is just resting just above it. So the likelihood of getting stopped out is fairly high when you factor that in. So just something to keep in mind. But that's the breakdown and examples of order blocks. But you can see their effectiveness when you combine them using the 1 hour and the 15-minute. You can trade them primarily on the 1 hour, or you can trade them on the 15-minute using the 1 hour as a reference point as well. Again, combining them with market structure and truly understanding higher highs, higher lows, lower highs, lower lows, what the higher time frame sentiment and bias is suggesting, and then finding order blocks that are trading within them, looking for, again, momentum and breaks of structure. You'll be able to frame up some very high probability and high risk to reward trade setups.